Good evening, everyone. Hope you're enjoying your weekend. And has the stock market recovery and the recovery in risk assets run out of steam? Now, let me just shift this title card across so we can have a look at the charts. And I know I'm calling this too early. I'm just starting to see some momentum running out in this recovery. And we'll talk more about that as well with the charts. And given that there's so much news that's impacting the markets happening outside of business hours, I've decided, at least for this video or for the foreseeable future, that I'm going to use futures contracts on the S&P 500, Nasdaq, and the Australian market, the ASX 200. Just because from Monday to Friday, those contracts trade 24 hours a day, so they trade through the night or through the morning, depending on which part of the world you're in. Um, so let's have a look at the US market. Now, the first thing I'll say is that I'm obviously not as big a fan of angled trend lines. I'm just trying to show that we're seeing some of the momentum run out. We've had this massive recovery in risk assets in stocks. So the April 7th low in the US market was, I talked about that in previous videos, quite significant. Hopefully you can see the spike low on the candle there. So where I would draw the trend, so there might be some people drawing the trend and going, hey, this is the trend. They'll draw the line there and go, look at that, bounce, 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 and we're about to bounce again. It's a buy. I disagree with that. I think the trend is where you capture more of the lows, more of the key levels. So I would draw the trend line there and say that was the uptrend we're in, because that covers the low, the bounce, bounce, lots of grinding there. And now you can start to see that we're breaking down a little bit of negative divergence on the momentum indicators. The MACD and the RSI peaked on the 13th of May or maybe the 12th of May. So the RSI was peaking here and the MACD was peaking here, and then you can see the market went on to make slightly higher highs. So we did see some, again, I understand I'm calling this early, but we're starting to see some loss of momentum in this recovery. From the spike low about 5 or 6 weeks later, the US market had recovered 24%. And keep in mind, these are all-time record highs for the US market. So a very sharp recovery, starting to lose a bit of steam, lose a bit of momentum. You might even be able to make a case that it's in a rising wedge pattern. That section there was obviously very volatile for a couple of days or up to a week. But you could draw a line there and make a case that, if you ignore the volatility around the 10th of April, 11th, 12th of April, that there is a rising wedge pattern there, a very bearish pattern. So this is not me calling for a stock market crash. This is not me, and I cannot give advice in this video. I can't give investment advice. I can tell you what I'm doing, what my clients are doing. We're being rather conservative here. We're not chasing growth. We're still allocated to the stock market, but we're in high income covered call funds looking to get 8 to 12% income. And we do have up to 5% of our portfolios in short positions split across the S&P 500, Nasdaq, and the Australian market. So I don't have those short positions in place because I'm calling for a crash. I have those in place as a hedge so that we can stay allocated to stocks, collect our 8 to 12% income, and not take too much of a. You don't want to take absolute views. You don't want to be all in, all out. We're just managing risk. If the markets came back down again, we might sell some of those short positions, shift back into growth, that sort of thing. If markets make all-time highs, okay, we're not going to capture as much of the upside. But again, these markets look very expensive, especially in the short term, even in the long term. If you go back to a 5-year chart, I mean, these markets are looking. I've shown that in previous videos. For the purpose of this video, let's go back to the 8-hour chart, shorter term chart. Nasdaq. So basically, the US mega tech companies trend is a little bit more defined. Very similar thing. You can see the low there on the 7th of April, the touch there, and you can see same as with the S&P 500, a little bit more defined. You can see the momentum indicators topping out there. The RSI topped out on the 14th of May. The index continued to sort of slightly grind higher. You can see volatility is quite low there as well. Without being a charting wizard, you can just kind of see that the momentum is just sort of shifting a bit. Again, these are all-time highs for the Nasdaq. As always, a little bit early to call. If you wanted to make a bullish case, you could say that this low here, this was key. This was, that resistance there. These were lows through January. If you draw a line across there, you could say, well, that's a pretty key level. The low there in January, tested again, consolidation when it first broke through. The recovery on the recent sell-off hit that same level, and maybe you could make a case that, hey, we're bouncing there and we're going to go higher. And I could certainly see a case for that, that there's a little bit more upside left in this recovery. Again, that's why I haven't mass sold everything and not doing like a Warren Buffett and sitting 30-40% in cash. Just being a little bit cautious, a little bit more conservative approach, not chasing growth here, chasing high income, the safety of higher income, or the relative safety of higher income funds. If we look at the Australian market, again, a little bit more clear on the Australian market, you can see the 7th of April low, uptrend in the Aussie. The Aussie market didn't double bottom like the US markets did, uptrend. That's where I would draw the line. Because look, if you try and draw it out here, you're not capturing any of this trading activity. So I would draw it there, and I would say that was let's zoom in a bit, keep in mind we're on an 8-hour chart. I would say, rising wedge pattern again, and a bit of a break, a bit of a break. The market continued to make higher highs for the move, but note, if we zoom out, it's a little bit easier to see the momentum indicators it's much more clear on the Australian market here. Market making a series of higher highs. In fact, 4 of them in total, if you want to count the first one, the peak and the momentum indicators. In fact, you could say the MACD peaked there. So maybe there's 5. RSI peaked there as well. So 3, 4, 5 highs, and 3, 4, 5, you can see negative divergence. Market making higher highs, MACD and RSI making lower highs. Negative divergence, that's generally a sell signal. Again, Aussie market almost back to the all-time high. It had a very nice bounce from the low there. You can see from the low to the high, about a 17.5% bounce, less of a bounce in the Aussie market, although I believe the Aussie market did decline a little bit less than the US market, so that makes sense. And again, you can see if I just clear that out, without being a charting wizard, you can just kind of see that the momentum is just starting to roll over a little bit. And again, not calling for a crash, just saying that we should be cautious, a little bit conservative at these levels. There are other assets that are much cheaper than, especially stocks in the short term. They've had quite a sharp recovery. Now, just clearing that for a second, moving across to Bitcoin. And I personally see Bitcoin as a proxy for stocks, as a risk-on trade. And I've shown in previous videos that there is, and I used I've left all the drawings on here because when Bitcoin was breaking out back on the 15th of April, I used that as a proxy to sort of forecast that we were probably going to see a bigger rally in stocks. Bitcoin is sort of a leverage play on tech stocks, on the NASDAQ, on global liquidity, and that turned out to be somewhat correct, I would say. Now, you can see the previous all-time high. Bitcoin has made a new all-time record high, just above 111,000 US dollars. But you can see back in December and January, that sort of 106, 107 level was key resistance. You can see the price hitting that level, and on the second time, you got negative divergence signals that gave you a chance to, obviously something than an all-time record high, you should probably not have your full allocation. Then we had the sell-off, and from the spike high, which might be a little hard to see in that video, is just below 110,000. We saw Bitcoin decline just over 30%. But what it did do was form this sort of falling wedge pattern. So I'm just going to demonstrate how these worked in the past. You've got the price making lower lows and the momentum indicators positively diverging, making higher lows. That was a buy signal. And of course, once you break it, falling wedge 2 is a bullish signal, a buy signal generally. And you see the breakout, some consolidation, plenty of time to get into the trade around 84,000-ish. And I'm not giving advice, I'm just demonstrating how it worked on the chart. And you can see since the low, coincidentally, the same day that stocks made the low, April 7th, so too did, it's a little bit messy to see. Let me see if I can, you can see April 7th, Bitcoin made the low at 74-ish thousand, 75,000. Do you think that's a coincidence that Bitcoin made its low the same day that the Australian stock market and the US stock market made their lows? You be the judge of that. I don't think it's a coincidence. I think Bitcoin is a proxy for stocks, for risk assets, and for global liquidity. And we've seen it pump to a new all-time high. Now, if you're just looking at price action, you'd say, well, it's broken out to all-time high. It's come back to test. This is bullish. And can certainly see a case for that. What I would caution on is that it's had this big run, this sort of 48, nearly 50%, if you want to take from low to high, 50% run. That's a very a good move. Um, you probably shouldn't have your full allocation to an asset when it's at an all-time record high and it's run so hard. The thing that would concern me is you've got this prolonged negative divergence on the momentum indicators. You might make a case that it's a bit of it's not really a rising wedge, but certainly a rising channel like that is not going to last forever. And if we refer back to the other charts of the Nasdaq US market in general, with Bitcoin having a strong correlation with stocks, it's you know I would take it's a marginally higher high, but the negative divergence, the big rally, that concerns me. This uptrend is probably, I mean, there's many touches on that uptrend now. It's probably getting ready to break. Now, it doesn't, again, I'm not saying Bitcoin's going to crash. I'm just saying it's had a good run. It's probably getting ready to run out of momentum. Certainly the momentum indicators are suggesting that. So again, just exercise caution, be cautious. And if we move across to the Chinese market, the this is still the 8-hour chart. Sorry, my apologies. Now, I would draw the trend here, and I would draw it across there. Now, that was when the Chinese were announcing massive stimulus, and you can see that red candle closed there. So that's where I would draw the line, and I would say these are your highs, and you can see we're hitting that again, and we're in a channel. Look at that. You could draw the channel there. In fact, the Chinese market, that sort of falling channel indicates that at some point the Chinese market is likely to break out to the upside, because you'd almost call this, I mean, it's very extended now, so maybe it's too late to call it. You call it a flagpole and a flag. So the Chinese market looking a little more positive on the chart, but certainly in the short term, if we take into account what we've just looked at in this video, you would say more than likely in the short to medium term, it's a bit of a sell here, a bit expensive, and probably needs to swing back down to test that again. Maybe it's going to do that later in the year, or well, in a few months' time. But certainly looking a little bit expensive in the short term, as do a lot of these risk assets. I won't touch on the dollar today. That's a different issue. But gold has been very interesting because gold has been moving. I like the action that I've been seeing in the gold price, because gold has, in the short term, has been moving opposite to stocks. So as stocks have been pumping, gold's been taking a bit of a breather. So gold did continue to run. It did make a low on the 7th of April, ran up to a fresh high on the 22nd. But since then, everyone's, in my opinion, Trump basically surrendered the trade war, the tariff war. He paused a lot of the tariff, wound back a lot of the tariffs to much lower levels, and then of course the stock market breathed a sigh of relief, and we had a continued rally in stocks, in Bitcoin, in a lot of other risk assets, and excuse me, the other thing too is the debt has been under pressure, and generally speaking, if interest rates are rising, and I don't mean interest rates that central banks set, I mean bond yields, when they're rising, that puts downward pressure on gold. So gold has been forming somewhat of a short-term downtrend as stocks have been pumping, and that's good. I would love, it would make my job as an investment manager, however you want to define my job, it would make it so much easier if when stocks are going up, gold went down, and when stocks are going down, gold went up, because as stocks go up, you sell a bit of your stocks, you buy a bit of gold, and as stocks come down, your gold would be going up and you can sell a bit of your gold to buy stocks back cheaper. Wouldn't it be wonderful if the world was that easy? Of course it's not, but we are seeing a little bit of that in the short term from gold. But this sort of flagging, this downtrend channel, it's broadening a little bit. You could even make a case that it's a bit of a flagpole and a flag scenario, which is a bullish pattern. Gold probably a little bit expensive in the very short term, the last week or two. Maybe it needs to do a bit more of that. But I see a lot of people on social media, and I've tried to engage with a few of you who are shorting gold. And again, I can't give investment advice other than to say, in general terms, shorting gold at the moment it's pretty dangerous. If you go to a 5-year chart, gold is in, you can see the little drawing there, how insignificant that channel is. Gold is in a raging uptrend. Yes, it's looking a bit expensive. Yes, you could say, okay, there's negative divergence on the RSI, but not on the MACD. And there's no clear pattern there to suggest that it's a necessary. I'm not saying that it can't go down. I'm just saying there's no clear indication that it's a topping pattern other than that it hit an all-time high. So for my clients and I, we did reduce our allocations. We had up to 20% allocation, and I've advised most people to reduce that to 10, 12%, given that we hit an all-time record high in gold, just being cautious, but we're maintaining allocation. Please do your own research to find out if that's appropriate for you. Anyway, just a little summary of where the markets are at in the short term. I'm not necessarily taking strong views here, other than the general theme being we've had a big recovery now. It seems like the recovery is losing a bit of momentum. We're being a bit conservative, not chasing growth, instead chasing higher income funds, being a bit more conservative in our approach. And it'll be interesting to see how it plays out. I guess if I was forced to make a choice, I would say, and again, we're looking at the daily chart here, you can see that US market on the daily chart, it does look a little bit more, maybe a little bit more bearish. Maybe it needs to come back up and test that all-time high again before the, maybe it needs to go like this before another downswing and some sideways action. But I would suggest the outcome that I'm expecting from here over the short term, short to medium term, say for the next 3 to 6 months, is I would expect stocks to be flat to slightly down, with maybe a short-term test of all-time highs again. So we'll see. That's my my best guess. We'll see how that plays out. Thank you very much for tuning in and listening, and I'll be back with another video soon. Cheers.